real-world asset-focused blockchain that suffered a $5 billion collapse over the weekend. No one ever knows when things like this might happen, but it sounds like you did.
Feels good to be right and to, however small it was, have made some level of difference out there. I was trying to alert people. Of course, the community fiercely suppressed me, including the founder himself. So I feel good about being right. Can't say I feel good about everyone losing money and having another billion-dollar crypto collapse here in 2025, but we'll get there someday, hopefully.
Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as a wild week continues to play out here in the story that we've been covering. We had JP Mullen on the show, the co-founder of Mantra, the real-world asset-focused blockchain that suffered a $5 billion collapse over the weekend. It was a pretty nasty candle. If you didn't watch our interview yet, you would have seen kind of the turmoil that played out. This was the chart back then, of course. It's not trading necessarily at 51 cents anymore. Let me refresh this bad boy, because there you go. It's come back a little bit, but if you look at that chart, hasn't come back all the way. And certainly leading up to this, I think it's pretty interesting. As we covered in our interview, there were a few people calling out the potential of all of this calamity, including one analyst over at Hedgeye, which I'm excited to have on the show with us today. Ishmael Asad is the digital assets analyst over there at Hedgeye, and he joins us here on Coinage. Ish, good to see you, man.
Thanks so much for having me, Zach.
It's a wild thing to be this right, Ish, in terms of seeing this play out. And obviously, again, it seemed like you weren't really taking a victory lap because a lot of people lost money in this. There were people who were trading OM, and you were basically out there saying, look, I feel bad for anybody who got caught in this. But, in terms of our interview with JP, even he was kind of saying that the timing of this, no one ever knows when things like this might happen, but it sounds like you did. So I just kind of want to ask you first, in terms of seeing all this play out, how surprised were you that this token was kind of trading at a $6 billion market cap on paper, and then to see it kind of what we saw play out over the weekend? What's your reaction?
Yeah, I'll tell you what, even though I called it out on Twitter just 3 days in advance, I was also surprised by the speed at which this coin collapsed. It happened within about 3 hours. I was watching it 1 second. I look back another second, it's $2.50. Look back in an hour, it's 50 cents. So I was definitely surprised by how quickly it all came out.
Yeah, but it was pretty crazy. As we highlighted in our interview with JP, I think we still have this text. I don't know if we carried it over, but the screenshot of Ish and JP going back and forth on X, because it was 3 days before this collapse. It was on April 10th that you were basically calling out, hey, when's the crash going to happen here? And he laughed at you. And so I guess, we can kind of tell this timeline-ish in terms of, this was obviously 3 days before the crash, and your research into this was well before it. But I just want to ask you first about this weekend. I mean, how caught off guard were you about some of those responses when you raised some of these issues?
Yeah, I was definitely caught off guard by the ha-has in front of all of his responses, and kind of just the sheer arrogance, dismissing my claims, not claims, just pointing out pure facts. And I was also caught off guard by not just JP Mullen's responses, but the community, who also came at me for making those tweets and told me, yeah, thanks, but we've done the research already, and anyone who says otherwise is mostly just an uninvited witch, is what some of the tweets said. So they were definitely not receptive to any sort of differing opinions.
Was it, just to be clear, was it witch?
Yeah, I think they called me a witch.
Okay, fair enough. Well, for those of the people out there who haven't watched our interview with JP, again, it's up on our YouTube, it's up on our site at coinage.media. Highly recommend. Again, this isn't our first one. We did the big interview with Do Kwon after the Terra collapse. We have some standing in terms of talking to founders pre-collapse, post-collapse. But I just want to play a clip in terms of when we caught up with him around some of this, because that was his tune ahead of the collapse. Very different tune after. In our interview, we'll just play a little bit of that ish and get your take on the other side. Take a listen.
Market value aside, this is not something that I would ever feel relieved about. I mean, an unprecedented event happened. Many people lost money and got hurt. I'm hurt. I feel like our community is hurt. Our token holders are hurt, our investors are hurt, and I feel responsible, even if I didn't do anything negligent or malicious or anything. But
I am
I'm going to
curious
do
though,
what I
if your investors, when you say your investors are hurt, like I wonder if they're actually down necessarily, even if it is trading at 70 cents. Like you
no,
said,
I
you've been
don't.
through the 90.
I think they're still not down, and that's why again, investors who had liquid tokens still haven't sold any liquid tokens.
Now, in terms of all that, the reason why I asked if he was relieved, Ish, and we're gonna spend the next 30 minutes digging into the specifics here. So if you're watching the stream, feel free to retweet it, to like it, let people know that Ish and I are digging deep on this because I mean, if you look at the chart leading up to this, if I were a founder and I was looking at this, I would at some point start to get nervous. And the people that we've heard from in terms of JP talking about what happened last year in the token run up. This is one of the better performing tokens. And to be candid, I hadn't even heard much of Mantra. And a lot of our viewers are expressing the same thing, that they've been in crypto for a really long time and hadn't heard of this token. And with a run up like that, you think you might have. And when people kind of asked JP about it, from what we heard, it sounded like he was basically saying, yeah, I don't know. I mean, I guess it's happening. And there are a lot of questions around OTC deals and pumping this up. But I asked if he was relieved, because if that was happening and you knew your token shouldn't be trading that high, and it was really only doing so because it's low liquidity, low float, then maybe you would feel relieved if eventually all this was over. And so that's what my question was coming from. But what about you, Ish, in terms of kind of seeing this before we got to this weekend? When did you kind of first start to realize, all right, there might be something wrong here?
We first started to realize it back in November, and that's when we at Hedgeye Digital Assets, our team, published something after Mantra first pumped. I'm looking at the chart here, from about $1.50 to almost $4 back in November, upon the news of tokenizing electric motorcycles on the Mantra chain in Dubai, some kind of fundraising mechanism. And after that pump, we looked into it. We looked at tokenomics and the fundamentals, and said, this doesn't justify this current valuation. That said, we were quite early, and the coin continued to multiply a few times after that, up until its peak. But that's when we first picked up on it. But yeah, I can talk about what made me start tweeting so close to the crash, if you want to get into that.
Well, I think even before that, one of the things that I noticed when I was kind of digging into how this collapse happened, and again, CoffeeZilla also had JP on a day after we did, and was chatting with him kind of about some of his takes on this ahead of our interview. And a lot of people were looking at this after the collapse because, all of these collapses generally are unique. Again, Terra being a stablecoin, algorithmic stablecoin, there was always the risk of a death spiral, very different and distinct. With Mantra, I think it's interesting just in terms of how much it says about other projects in crypto that are kind of doing similar things. But for me, what stood out, and I think you'd agree, is looking at the unlock schedule over here and some of the details around launching an L1, your own L1, 4 years after you've had an ERC20 token already out there and floating. Kind of negates the idea of having lockups around your own L1, and this doesn't get discussed too much. I don't think Coffee brought this up either. Talk to me as kind of the guy who, well, I guess I shouldn't put it all on you, this was a DAO vote, but in terms of those holders and yourself leading the charge, what that decision process looked like and whether or not you would go back and change it.
No, I wouldn't. I mean, I don't think we would even have the Mantra chain layer 1 if this end passed.
But like in terms of a one-for-one, hey, use your ERC20 tokens that have been out there for 4 years and use them to mint new tokens on our mainnet that just launched last year, seems to me that it would kind of negate the idea or the necessity or effectiveness of token lockups on the new chain if anyone can just kind of take them and move them over. So to me, that was a huge piece of this, but I don't know if that was part of kind of you realizing, that's a lot of supply to not meet a lot of demand.
Yeah, definitely. I think, as you said, it really negates the effectiveness of having an unlock schedule, because they basically doubled the supply. There was like 8,888 OM tokens ERC20, and then when they launched their L1, they minted the same amount on the L1. And I've seen other projects that move from ERC20 to L1, and what they did is they allowed you to bridge the ERC20s to the L1 one for one, and it burns one and creates a new one on the L1. But instead, they minted the whole new supply on the L1, and they also allowed the old ERC20s to come on in addition to that. So they literally doubled the supply. And out of that new supply that they minted for the L1, they kept a large chunk of that as well for core contributors, seed funding, and ecosystem development grants, and so on.
Yeah, it was interesting to see that. And then I think, I don't know, if that was kind of the beginning, because some of that stuff was playing out before this all happened. And so again, just to kind of dig into the specifics here, is it seems like people in the community even were starting to wake up to tokens being moved to OKX, the exchange in question here, where it basically sounds like someone or a group of people basically used a bunch of OM tokens at the prices they were trading at as collateral in a position and got liquidated, and kind of triggered this huge move back down to the downside because there wasn't enough liquidity to support something like that. And it sounds like some of the realization around, wait a minute, where are all these tokens coming from as they were bridged over to these other ecosystems, was happening kind of in March, in February, in like kind of the earlier days running up to this, where people were starting to realize what was going on. We certainly weren't, because we hadn't even heard of Mantra, to be honest with you. And then, here we are. And so I guess as you put the pieces together, was there like that, like that oh shit moment when you kind of pieced together that some of this bridging was going on, and also maybe some of the hype around their announcements leading up to this hadn't actually been bearing fruit? Because they were talking about working with one of the largest real estate developers in Dubai. If you haven't been to Dubai, Damak is plastered basically everywhere on every huge ass building out there. And they're like, hey, we're working with them. And so if you were just hearing about this token, I would think that, hey, maybe some of that's good. But when was kind of like that point for you?
The point when I realized that it's not adding up, I would say I certainly wasn't monitoring any like exchange flows, like who's bringing Mantra from this chain to the exchange. I was not aware of that, but definitely, I think the turning point for me was one, these token unlocks, which are to start next week. As you said, they're kind of negligible, very small as a proportion of the overall supply. But to me, that was like catalyst one that is going to add some additional selling pressure to a coin that's already way overvalued. And then I was also looking at just where the price is. It's clearly has cooled off a bit from its meteoric rise in the past few months. And it looks like it was failing to maintain that $6 level. It plummeted below $6 for a brief second on April 4th to like $5.70. And then I was like, it's only a matter of time before this coin can't hold it anymore. And that, in combination with our kind of at Hedgeye bearish outlook on the crypto sector for the time being, put the pieces together to come to the conclusion that it's reckoning time soon.
And it was indeed reckoning time soon, for those, spoiler alert, on kind of how this all played out, because then we did see the beginnings of that, on paper, $5 billion collapse. But I guess even after that ish, when you're kind of reacting to that moment in time, you did kind of put out a video being like, hey, look, I tried to tell people about this. And like, again, it kind of sucks for the people who were caught in it that may not have known some of those details. And we even asked that to JP too, in terms of like, were you transparent enough? Do you think you and the team did enough in terms of transparency?
It's a good question. I mean, I do feel like we have always tried to be as transparent as possible. I don't feel like transparency is necessarily the issue here. I do want to continue to try to be as transparent as possible and make sure that everyone can see that, again, we haven't actually sold a single token.
Where do you fall on that in terms of whether or not enough was told to people about it?
I think, it's a bit of a mixed bag in my opinion. They were transparent. They did publish these reports showing where the supply is. It's on this chain. They said, the whole voting proposal was done transparently. That said, the votes are typically controlled by a small handful of voters because it's a highly concentrated token supply. But I think what really bothered me about the founders dealing with this over time was, despite all these things, which kind of make OM as a token kind of a bad thing to invest in, especially at the prices it was at, the founder continued to go on Twitter and they would tweet, "We are the layer one tokenizing real world assets." Other chain, they were dissing the rest of crypto space. While other chains are focused on hype, pumping, and sentiment, we're actually building real world assets. Meanwhile, there were no actual assets tokenized on Mantra. You can look at the block explorers. You can look at DeFi Llama. The total value locked on Mantra is like 4 million. and that's just a decentralized exchange. That's not tokenization. And so there's just such a total disconnect from the sentiment from the founder and the community of OM holders and reality.
Yeah, I mean, I think that that's kind of one of the interesting common threads in crypto is like, you almost just need to nail the narrative because it's all the same game in terms of, hey, look, this is hot right now, and we are the project that has become known for this. And very clearly, Mantra was really trying to be the blockchain for real world assets. And the thing that kind of sucks about it, too, and I think, you know, you and I were talking about this before we launched the show today, is that, like, you're actually, in terms of your analysis and focus area, is like you're pretty bullish on real world assets. And so, like, maybe we can get into in a little bit later your guys' best calls for kind of where people might find real value or real building in real world assets, because I think the space, ourselves included, in terms of what we're trying to build, like, people want real world assets. And I think a lot of people are bullish on them. But to see this kind of play out, not so great in terms of a project disconnect around some of that. I'm trying to bring up your tweets now in calling out some of that because, again, to me, too, like, if you go through kind of some of these pieces in terms of what Mantra was talking about. I mean, some of these are huge, right? In terms of, again, not just a mock, but I think a lot of the other pieces in calling out, I guess, everyone kind of does this in terms of partnering with Google Cloud, and then it becomes like, hey, we partner with Google Cloud. There are some cardinal sins that exist in crypto across the board. But I mean, what does that maybe say about what you see and how much shit people have to sift through to find real projects in crypto, if not just kind of the hype, but also the tokenomics pieces? I mean, is it fair to say that maybe what happened to Mantra here might not be too all uncommon when it comes to low float and projects maybe potentially dealing with some of the OTC pieces that played out here?
Yeah, 100%. I think for one thing, there's a ton of low float projects out there that may have a great protocol behind them that actually is getting activity, unlike Mantra. But the tokenomics for the asset are just unrelated to the protocol, low float, and that just make the token a bad investment, even though its name is going to be associated with something that actually is doing good. I could rifle off a bunch of those maybe a little bit later. But in terms of what there is to sift through to find real value in crypto, I think there's a lot, and Mantra really shows that because it had big partnerships. Google Cloud, Damak in Dubai, another real estate group, for a total of $1.5 billion in real estate to be tokenized on this L1. I mean, that's never been done before. So, of course, people are going to be like, wow, I need to get my hands on this before it goes up. But that said, you can't stop the research there because it wasn't actually the case. None of the assets are on chain. Not even the e-bikes are on chain yet. So that aside, you have the fundamentals not there, and then you look at the tokenomics too. It's a recipe for disaster, and that's exactly what we got with Mantra.
Well, that's kind of why I feel like it's important to talk about it now too, because we saw the same thing with Terra 2, and again, different situations. But after that collapse, what was supposed to happen happened in terms of an algorithmic stablecoin and the death spiral. It continues to print kind of exponentially, and then the market's flooded with supply. In the case of Mantra, it's kind of like that supply was already baked in, like we discussed. The token unlocks in terms of mirroring, the supply is already there. So I think, you know, we were even chatting with people, you know, who had been attached to maybe some of the sell-off here, in terms of, you know, if it wasn't the case that a lot of this was just kind of manipulation, if you want to call it that, then you would have seen kind of somewhat of a bounce back. You know, normally in like stocks, if a stock goes down, eventually there's maybe a rally back. But with this, I think it's because so much of that did happen, and because so much of the supply overhang is real. Would you be in the camp that, like, anyone buying this, I mean, I did go to 50 cents, now here we are at 80 cents, but like still a far cry from the $7 we were at just a few days ago. And so, like, I guess, is there a warning-ish to people who might be trying to bottom feed here that they should be aware that that's not coming? Or do you take the case that, like, hey, look, let them cook, because, like you said, none of that they had actually announced ever played out. But then you kind of got to consider that, like, maybe some of those partners are certainly distancing themselves from the project now.
Yeah, I think maybe, as you said, let them cook. I don't know the intrinsic value of OM tokens, but maybe at this current price, it's more fitting to what's actually happening on the chain. I'm not aware of the partners pulling out from their agreements with Mantra. If they haven't, that still leaves potential for this coin to come back. But the speed at which it multiplied over and over from 5 cents to $9. That was too quickly, and it was not justifiable.
Wait a minute now. Hold on now. This might be a response I wasn't entirely expecting, because I do kind of consider these to be very strange circumstances. Like what we're talking about here, and kind of CoffeeZilla's interview versus ours. There's two different kind of takes here, right? And certainly, normally in crypto, when you see a pump, there's a dump. And it is very odd to consider a pump and dump, or allegations of a pump and dump, when if you take JP and the Mantra team at their word, that they themselves weren't the ones who dumped anything in this. And so it is kind of strange to consider why someone might execute a pump and then no dump, to use the very technical terms here, Ish. But that's kind of strange. And so, I mean, if you think that that's true, then you could make the case that there were a lot of people who were doing shenanigans. Certainly, perhaps, I don't know. No one really in the space understands what market makers do, but there's some of that aspect here too. Certainly the OTC deals, as we talked to JP, certainly some of those could have been more transparently discussed to OM token holders or potential buyers, as you said, as the price ran up. And certainly maybe some of this transparency could have been there around the tokenomics, maybe even more so and less hype. However, now here we are on the other side. And if you're saying that, hey, look, they haven't sold their tokens, you even got JP saying he might burn his allocation of locked tokens that also had invested and unlocked. I mean, to me, the big unknown here is how many of those tokens were in the hands of people at a cost basis that is still lower than 75 cents, because this token's been around for 4 years and it got a huge ass supply, that I would be in the camp that, no, I wouldn't even want to bottom feed here. But it sounds like I'm a little surprised to hear you say that, hey, look, maybe.
Well, the only reason I say that is because I think the story is still very unclear. We're just days into post-collapse mantra. JP says the insiders didn't sell. He wants to do burn and buyback. It's unclear who did the dumping. If it was insiders, I certainly wouldn't buy back into this coin. Honestly, even if it wasn't insiders, like even though they have Damak and other real estate partnerships that could bring value to the chain, I personally probably would stay away from this one because of permanent reputation damage and clearly, I would say, an incompetent team. I'm not big on hugely relying on the team to carry my crypto project to the moon. But JP Mullen, I think his responses in the interviews with CoffeeZilla and you on Coinage really go to show I don't think he really knows what he's doing. You look at the guy's background, he graduated from college and went straight into Mantra as a founder, especially in the real world asset space where you're tokenizing real world assets on chain for the first time. I feel like you need a very robust foundation, and I'm not sure that the Mantra team really has that. And his answers in these interviews really go to show that. With CoffeeZilla, they were debating the definition of pumping, and JP Mullen just, I don't know what planet he's living on, but he seems to have a different definition than everyone else. And also on the comment you made of how many OM holders have a cost basis below 70 cents, I think that's pretty ridiculous that JP Mullen said most people are not in the red yet. I think that is totally ridiculous. The amount of people that were coerced into this project on Twitter over time to diamond hand OM tokens, a lot of them definitely came in the past few months, and those people all have a cost basis well over 70 cents. So I think there's definitely an incompetent team behind this project. Are there real partnerships for the future? To be seen still.
Yeah, I mean, we asked about that piece too, and he did say, because, he was saying his investors are hurt, and I was like, well, are your investors even in the red? Because normally, VCs and investors who get in early on these projects have a cost basis that is well below where any retail buyers ever get access to those tokens on exchanges. And he said, no, they're probably not in the red. Granted, that could be because they haven't sold, as he said, tokens still locked up, but still, paper losses, I assume, aren't there either. And so, I don't know, it's one of those aspects that, again, is not necessarily unique to Mantra. However, I think I would agree with you in terms of what is unique to Mantra is the decision to take an ERC20 token from years ago and convert them one-to-one on a new mainnet launch is something that I do question in terms of how you can even do that and then defend token lockups if anyone can come around and just completely change all the aspects of this tokenomics and just, kind of run with that. And I think that played a significant part here. But I do want to shift maybe, Ish, to some of the components of real world assets in general, because I think one thing that you and I would agree on is that it's a huge narrative, and it's one that Mantra definitely rose to fame. But before we get into that, I think it is a fair question to consider a warped world in which, would you agree, from an analyst perspective, that maybe doing something like this is a calculated bet on marketing your project? Because, like, think about how many people have woken up to what Mantra is and have talked about Mantra now. I think it's fair to say maybe it's bad press, but if you take the position that any press is good press and put aside that, if they haven't dumped, you're sitting here at 75 cents, but how many people have heard about it? You and I are talking about it. Is there a case to be made that maybe this is a calculated decision on the part of some people in crypto to just say, fuck it, we're going to get eyeballs on us, and people can buy the token afterwards because some people are going to buy the dip?
To be honest, I think maybe there's some people making that calculated bet, but if they are, I think that's a very poor calculation. Because look at Terra. That thing went from $160 to zero. They launched Terra 2.0. Nobody's going to buy that. Nobody's going to build on Terra 2.0. I think the reputation is stained permanently. In crypto, the ethos are really about decentralization, trust, not in the people, but in the network. And these kinds of events, I don't think all press is good press. Bad press in crypto seems to be permanent.
You raise a really good point, and I hate to keep talking about 1,000-foot level things, but that's what we do here on Coinage. We don't always talk about price. Sometimes we talk about the deeper meanings, and you mentioned that. It was the takeaway that we had after our Big Terra interview with Do Kwon as well, which is that, you can build as much trustless tech as you want, but at the end of the day, you still got to trust the humans behind them. And it sounds like a part of your call here and not to buy OM on the dip is because you don't have trust in the team. What does that say maybe more about kind of the analysis that you have to do, that analysts have to do into the teams, and why it's so important to calculate those pieces in considering projects too?
Yeah, I think the team is an inevitable piece of crypto investing. I like crypto because the emphasis and dependence on people and teams is reduced compared to some other investable assets out there. But early stage projects, especially, they do depend on the team, and it's important to do some due diligence on that. It's one thing to have a blockchain with solid fundamental architecture. If it's really good, even with a pretty mediocre team, that can get by. But with something like Mantra, which I think just had kind of okay architecture, really nothing crazy. You look at the Mantra block explorers, pretty not too good, to say the least. That in combination with a very young and inexperienced team, it doesn't really present itself as a great investment.
Let me ask you this too then, Ish, because I know you're deep in the weeds on this as Hedgeye's digital asset analyst, the specialist over there at Hedgeye in terms of researching some of these projects too. And again, people are just tuning in. Ish called it 3 days before a $5 billion collapse. So I'm one to maybe trust what you have to say beyond just Mantra now. But if you're looking around at other projects, as we just discussed, it sounds like you and I are on the same page, that there are a few. Surprising to think, by the way, we're talking about this because it was one of the projects in the top 50. So it was not like some meme coin somewhere that, on paper, it completely nuked. This is listed on like OKX, on a lot of exchanges out there. And so people could open some pretty huge collateral positions or open pretty huge positions and use OM token as collateral. So it's not as if this is a token, even though some people in the US might not have heard about it because the team's based over there in Dubai and UAE, but people did know of it and used it as collateral. So to me, it'd be very important to maybe highlight other projects that you see that might look similar in the top 100, 200, things like this that you might call out as, hey, look, these projects have gotten larger than they deserve to be when people are considering them. Is there anything on your radar that would fall under that category?
Yeah, there's no names off the top of my head. I could scroll through. I won't name drop any coins for the sake of it. Maybe you'll have to get our more in-depth research for that. But I think number one kind of insta yellow flag that we find in these coins is a huge discrepancy, as we've been talking about, between the market cap and the fully diluted valuation. That's like how many coins are minted versus how many are circulating. That's always a bit of a yellow flag. It's like, why is the team keeping so much? Bitcoin, it was not like that. Ethereum, 98% was in the community sale. These days, coins are heavily captured by VCs who come in, they buy up all the tokens extremely early, and they give a mere 5% to the community in the open market. And that in combination with a lot of these coins out here, especially for protocols and apps, are just governance tokens. As I was saying earlier, there's tokens that are not really intrinsically tied to the activity of the protocol to which they're native. So they're just used to vote on changes to the protocol, but they're not used for gas fees or staking or anything like that. So when you have low float, purely governance token, that doesn't usually end well.
Yeah, I mean, I think it's something that like we've talked about a lot, obviously. And if you read Matt Levine from Bloomberg, I think it's always hilarious because his main point is that crypto continues to find new ways to invent problems from traditional finance in different ways, and it is true. But I also feel like we are inventing new solutions to problems as well. To be fair to our industry, which is why Coinage kind of came around with our own model in terms of being a decentralized and community-owned show. We are a Colorado-registered DAO cooperative, one of the first in the U.S., which enabled us to pay patronage dividends to our NFT holders. So we're one of the first NFT projects, if not the first, to pay a distribution back to NFT holders. And I think that's important because as we shift to discussing real-world assets-ish and why people are excited is that, like, so many people for so long were afraid of real utility in this space. To your point, it was always just like, hey, buy this token and vote on some stuff. Which, to be fair, I mean, people who own Coinage NFTs can vote on who we have on the show and which projects we do cover. But I do think it's important to highlight the evolution of projects beyond just that now, which, as we, pay distributions back to NFT holders illegally, I think it's important because it brings back rationality to this space. So I think, a fair question to you is that why you're bullish on real world assets in terms of kind of like, again, taking the best bits in terms of tokenization and democratization, but then not just continuing to do bad things, but tie in rationality with real world assets to where some of this does make sense?
Yeah. And I guess, on the topic of governance tokens, I think they're not all bad. It's not real world assets, which I think is the only good sector. Some, like I think the Coinage NFTs, as you said, they pay distributions back to their holders. That's great. That's real value in a token or an asset. But what I like about the RWA sector is not just that it's the only thing out there bringing solutions to existing problems. I think there's other areas too. But to me, it seems like the most obvious application of blockchain. Blockchain started as money with Bitcoin. Then we had general purpose layer ones, Ethereum and Solana, for launching everything under the sun. But it only makes sense to me to merge our whole existing financial system onto blockchain because it's just better. 24/7, transparent, globally accessible. And that's where I think real world asset tokenization is really going to bring some huge change to the world in the next 10, 20 years.
Yeah, I think my main contention is that you really can't have like real world assets without real world projects first, I guess. And that's why, Coinage has been here for 3 years. It's not like overnight. By the way, crazy to think that you could have built a $6 billion project. And I think there is some sniff test that should be here in crypto always. We keep seeing these giant ass market caps. Be like, yeah, can you create a $6 billion project in 4 years? I mean, it's been done, but it's been done by like Sam Altman and maybe some of those other people. Can it be done by, someone in Dubai? Maybe. I'm not going to shit on that, but maybe not realistically. Now, here we are in year 3, and humbly, we are here basically selling NFTs that currently are trading, I think, for about $200. And so, there is some rationality tied into if you're going to try and do something real, it's going to take time and it's going to start small. But I do pride ourselves on allowing people to actually get access to these stuff before VCs and flipping the model on its head, which is why we're going down to chat with Hester Peirce and the rest of the crypto task force about what we've built at the end of the month. But enough about Coinage for the time being, Ish, because I understand too that you also have another project in the real world space, real world asset space that you're looking at in terms of one that actually might be doing something real and might be doing something in a good way. Which one is that one? And because it's not on my radar, at least yet.
Yeah, I think there's a number of interesting projects in the RWA space. The lowest hanging fruit so far has shown to be tokenized money market funds. We've seen BlackRock's BUIDL tokens. There's a bunch of other protocols doing that. Mantra was trying to be this layer 1, kind of like Ethereum, where it's general purpose, but for tokenizing real world assets. Obviously, I think it's failed to do that, at least so far. There's no assets there. But the one project that I think is aiming to become the same thing that has some real potential is called Polymesh. It's definitely been on my radar for some time now. Ticker's PolyX. And like Mantra, it's a layer 1 for tokenizing RWAs. It has KYC for all users. What I like about Polymesh is they embed very customizable compliance rules into the asset creation process. So if you look at the Polymesh Block Explorer, where you can, by the way, see that there is about 400
Am I
assets.
pulling up the right one here, by the way? Sorry, just to make sure.
I can't see your
13
screen.
cents seem about right. Wow, 13 cents?
Yes, that's the right
Okay.
coin right there. I think its market cap is maybe 150 million or so.
Yeah,
Super
it's a pretty
small.
small guy.
As you said, things start slow. They start early and take time to build. But what I like about Polymesh is the architecture, and they do have a team that is experienced and has connections that make it appropriate to bring something for real world asset tokenization to market.
Weirdly enough, I like seeing it down so much recently. Like, I almost feel like where you get into problems, and what we saw is like, okay, if it's a bear market and everything's hurting, like, unless you've got some sort of shit going down that's like groundbreaking, everything's selling off. And so things should be going down in general. And so I don't know. I think that's generally a good sign. I will do some more research and probably lean on yours as well to dig into Polymesh a little bit more. But no, I think in general, all of this is important because I guess, like I said, there's so much shenanigans. I mean, if there's more there on Polymesh outside of what you've talked about that you do enjoy, or maybe some things that people want to learn more on that particular project, is there any reason as to why now it would be on people's radar? Or should be?
In terms of like news coming out,
Yeah.
I would say the coin has been steadily announcing new, partnerships, as everyone likes to say in crypto. What does it really mean? That's to be seen. But you can see on the Explorer for Polymesh, there are actually assets like real estate in Dubai, for instance. Actually, those are the two most recent assets created.
Oh no! Don't do me like that, man. Don't do me like that.
Hey, there's legitimate stuff coming out of Dubai. Maybe not all the time, but there's at least some. So there's real stuff going on there, and that's what I would say.
We will see. We will dig a little bit more into Polymesh. I've been, I'm sure people listening to this might have some shock syndrome to get over, perhaps over the next few days before they take another flyer on a Dubai-based real-world asset project. But, who am I to speak for them? Outside of all that, though, Ish, I do want to say, appreciate you coming on the show and highlighting all your research. Again, I don't think anyone ever wants to take a victory lap. I almost think about, that scene from The Big Short where they're like, hey, don't celebrate. Every time GDP goes down, you got suicides out there. And same thing that happened with Terra. It's like, granted, I wasn't right on that one. I think a lot of people in our community might not have been right on that one. Anytime things go down, there are winners and losers. So I don't, I commend anyone who doesn't really who doesn't dunk on losers in this space. Which is partially why, when you're reporting and doing interviews in this space, without all the facts, it's very difficult to really figure out what's going on, which is why at Coinage, we really just have conversations and ask people and then let the viewers make their own judgments however they want to. If you watched our interview with JP, you probably said, I don't know. And then maybe a lot of people had the same reaction you did in terms of, I'm not sure how confident I am on this team, given what's played out and the decisions they made along the way. But given all that, Ish, I mean, when you look back on your research, and obviously I want to give you the platform to maybe celebrate at least the research, how do you feel right now?
Yeah, it feels good to be right and to, however small it was, have made some level of difference out there. I was trying to alert people. Of course, the community fiercely suppressed me, including the founder himself. I guess he took the victory lap when I was the loser in this case. But when it all happened, it was exciting to see the fruits of our research, be true. But of course, when I looked on Twitter, I saw everyone panicking. People who, like you said, probably never heard of Mantra even before that. Everyone was like, what's going on with Mantra? Why is this coin dumping 80-90% in 3 hours? And that's why I made that short little Twitter video, was just trying to, leverage my knowledge of what was happening and share that with people to add some clarity. So I feel good about being right. Can't say I feel good about everyone losing money and having another billion-dollar crypto collapse here in 2025, but we'll get there someday, hopefully.
I mean, well, that's the thing that's always weird for me when we're covering this is like, can we call it a $5 billion collapse if it was never really a $5 billion project? And that's like, one of those things that makes it difficult, but it is definitely real in terms of if you put money in and you didn't have it, a day later, those losses are very real for a lot of people. And so whether it's $5 billion or not, doesn't really matter. If you lost money, you lost money. So it does always suck. Which is why, again, I think it's important for us here at Coinage to take people like yourself and invite them into our community, which, again, as I was telling you before we had this on, every month we invite people into the Coinage community. Basically, I would consider it an honor. But I think, we want more people in our community just like you who are smart and who had called this. And so it's an honor for us here to extend that we will be nominating you for membership here in the Coinage DAO. And, it's something that I think it's not a medal of merit, but as Matt Damon has once said, it does matter.
I just want to go on record. I'm recommending William Costigan for the Medal of Merit.
I don't know. I don't know why. It's an honor, I think.
It's an honor for me to be here, Zach, and be nominated especially. I think the work you guys do in Coinage is really great. You're covering the important topics in a very timely manner. So it was great to be here to be able to share some of our research with the world, which is definitely...
Thanks, man. I just kind of wish that we saw it ahead of time. That's the thing. And that's why I think, again, having you involved, we'll make sure that we don't miss it next time, because 3 days ahead of a $5 billion collapse is a pretty good spot to be. So Ish, can't thank you enough for coming on, man. Appreciate you taking the time as always, and hope to have you back on soon. If you haven't checked out Ish's research at Hedgeye, would encourage that. Hedgeye digital assets analyst, Ishmael Asad. Thanks again, man.
Thanks, Zach.
Appreciate it. And as always, we do these Monday shows on Wednesdays and Thursdays. I suppose that makes those Wednesday shows and the Thursday shows Thursday shows. But we do 3 a week, and we also have our YouTube page if you haven't checked that out for more interviews with founders, whether they're collapsing or growing. We do both around here, which is important to highlight both sides of the coin as we do at Coinage. And perhaps, again, we'll end with just a little bit of reads here as well. I want to thank, first of all, our sponsors at Stacks. As we always do, we encourage people to check out more about Stacks here, as you can earn 5% yield on your Bitcoin using SBTC at Stacks. Learn more there as well. And of course, if you haven't heard of us here at Coinage, we want to close with just a little bit more about what we do here as the first community-owned show in Web3, not just covering Web3, but living the very values that make Web3 Web3.